Hi everyone and welcome to this video where we will be doing a problem where we are required to prepare what's called a closing entry. Alright, so let's hop over to the computer and look at this together. Alright, so in this problem it says to refer to the adjusted trial balance of Green Lawns Incorporated, which was illustrated in exercise 5.2, which is the one that we did right before this video. So if you remember from that video, we took this trial balance and we made an income statement, statement of retained earnings, as well as a balance sheet. And our job in this one is to prepare the closing entry related to this trial balance. All right, so let's do part A together here. All right, so all that a closing entry does is it zeroes out all these income statement accounts. It sets them back to zero. All right, so revenue has a credit balance, lawn care revenue earned, credit of $230,400. It's a credit. To make that account go to zero, we're going to debit the account for $230,400. And then we will do the opposite of the expenses. So the expenses have debits. To make those go to zero, we need to credit those accounts. All right, so let's do that here. So we're going to say debit. And actually, we've already typed this out in the previous problem. So I'm just going to say, oh, maybe we didn't type out this revenue. So let's just call this lawn care revenue earned. Lawn care revenue earned. And the amount was $230,400. So we're going to do 230. And let's copy this formatting here. All right. So, and let's make this bigger so you can actually see it. Let's make this, we'll go up to 125% here. Okay. So debit lawn care revenue, $230,400. And then we're going to credit each one of the expenses. So we're going to say credit. We have salary, supplies, advertising, depreciation, income taxes. All right, so salary, supplies, salary, expense, credit, supplies, expense, credit, advertising, expense, credit, depreciation expense, and credit, income tax expense. I think that's all of the expenses. Let's double check ourselves. So salary, supplies, advertising. Salary, supply, advertising, depreciation, income. Okay. Now we are going to credit these accounts because in the trial balance, they are debits. And what we're trying to do, if you remember the T accounts, we're trying to set this to zero. So we're going to say 124,800, 2880. So let's do the first one first. 124,800, 2880. Advertising was 720. Depreciation was 2,400. And taxes were $27,840. So 27,840. If we did this correctly, we should get a case where our debits, our total debits equal our total credits. And let's see if that is true. So we're missing something here. Okay, what are we missing? So we can see the credits don't equal our debits. And the clue here is that they will never equal the debits will never equal the credits in a closing entry if we forget to put net income into retained earnings. Okay, so we're going to credit retained earnings for the difference between our revenue and our expenses. So if we do this, it should come out to net income of $71,760. Okay, so $71,760. Let's add this up. And now we have a journal entry here that balances. I just put these totals in to check myself. You don't need to do this. But the insight here is that this number, right, this number 71,760 is the net income number that we calculated here. So what exactly is going on? Well, what's going on is this journal entry that we just prepared is the journal entry that puts the net income, puts the 71,760 into retained earnings. This credit to retained earnings increases retained earnings. All right, so that is the answer to part A. Part B says prepare an after closing balance sheet dated December 31st, current year. We're not going to do that. We've already made the financial statements. We don't need to go back and update this trial balance, which is what they're asking us to do. So let's disregard part B for this lab. And then part C says compare retained earnings balance reported in the after closing trial balance to what we reported in B. The insight here in part C is that the retained earnings number in a post-closing trial balance will be the same as what you see in the statement of retained earnings. Okay, and again, we don't need to update, we don't need to prepare a new trial balance. Let's ignore B and C, but I thought I'd just explain to you what it was asking for there. All right, well, that concludes this video. I hope you found it helpful. Thank you very much for watching. Take care.